Hey investors of all experience levels. Let's face it, it is a fact that fees can be a complete and utter nuisance. You have put a lot of effort into earning your money, and the last thing you want is for a significant portion of it to vanish each time you engage in a transaction. Therefore, it is only natural to be skeptical when a platform such as eToro advertises that it does not charge commissions for stock trading. Do you think it's too good to be true? However, there is no need to be concerned because we are here to solve the mystery of eToro's commissions and fees. The answer is not as straightforward as yes or no, so fasten your seatbelts. In order to get a better understanding of what you are actually paying for, we need to deconstruct the structure of eToro because the company plays a bit of a shell game with fees. First things first, let's address the big claim, commission-free stock trading. Here's the good news, eToro does hold true to its word. You won't be hit with a flat fee every time you buy or sell a stock. This applies specifically to buying actual shares, not contracts for difference, which we'll get to later. But hold on a minute, savvy investor. Don't go clicking over to eToro just yet. Because while commissions are out of the picture, there's another sneaky fee lurking in the shadows, the spread. The spread is the difference between the buy price, what you pay, and the sell price, what you get of an asset. Essentially, it's the built-in profit that eToro makes on every trade. Now, eToro doesn't explicitly advertise their spreads, but they can vary depending on the stock you're trading and market conditions. Generally, less liquid stocks tend to have wider spreads. Think of it like this: imagine you're buying apples at the grocery store. The price tag says $1. But when you get to the cashier, the total rings up as $1.05. That extra nickel is the spread eToro's cut for facilitating the trade. So, while eToro might not charge a traditional commission, those sneaky spreads can add up, especially if you're an active trader. Here's the key takeaway: commission-free doesn't necessarily mean free. Now, let's complicate things a bit further. Remember how we mentioned CFDs? These are financial instruments that track the price of an underlying asset, like a stock, but you don't actually own the shares themselves. CFD trading can be a bit more complex, and guess what? eToro does charge a commission on leveraged CFD positions. This commission is a small percentage, around 0.09% of the total trade value. Leverage, for those who are new to the game, is essentially borrowing money from the broker to amplify your potential gains and losses. It can be a risky strategy, so make sure you understand the implications before diving in. Alright, so we've covered commissions, spreads, and CFDs. But that's not all. eToro has a few other fees to be aware of. There's a currency conversion fee if you're trading stocks in a currency different from your base account currency. There's also an inactivity fee if you haven't traded in a year, and a withdrawal fee, which applies when you transfer money out of your account. Here's the bottom line: eToro's fee structure can be a bit opaque. They might not charge explicit commissions on stock trades, but the spreads can eat into your profits. CFDs involve leverage and additional commissions, so proceed with caution. And don't forget about those other miscellaneous fees. Do your research, understand the fees involved, and make informed decisions before you start trading on any platform. With that said, thanks for watching, and until next time, happy investing.